and welcome to the Metals, Money, and Markets Weekly, brought to you by Mining Stock Daily, with exclusive syndication at kitco.com. I'm your host, Trevor Hall, and joining me to recap this week's numbers is the Mercenary Geologist, Mickey Fulp. Hey, before we get started, thank you so much on welcoming me on this endeavor.
Well, I'm really glad to have you, Trevor. We've rebranded the show a bit, but the format's going to be the same, and let's get going. Our first show.
Let's not get too gushy on the first time. So let's start with some precious metals. How do we end up? Looked like gold was up above 1,300 for the first time on a weekly close since February.
Well, gold had a very volatile, a bit volatile, but vacillating week, and this was amid profit taking and some consolidation. So it got down into the low 1290s, but it popped right up again today on a weekly dollar, closed at 13.02, up $3 for the week. Silver was down 3 cents, so essentially flat at 15.28. Platinum had a good week, up to 829 for a 1.5% gain, but palladium had another even better week. It was up to 1536. That's just $3 or $4 off its all-time high for nearly a 3% gain on the week. And I want to mention, Trevor, that the platinum to palladium ratio right now is at 0.54, which is an all-time low. So folks, go out and I'm telling you, it's time to buy platinum bars and coins.
And it looks like Dr. Copper was up a few cents at the end of the week as well.
Well, it's 4 weeks since copper took a leg up, if you will, or actually, 4 weeks. And it got into that $2.90 to $2.96 range. It's range bound. It's extreme backwardation out to as far as the futures go. But the metals are starting to move. There's lots of cancel warrants coming out LME warehouses, probably because it's in backwardation. Copper's future right now, or near-term future, is very dependent on Chinese-U.S. trade and Chinese stimulus. And for subscribers, after market today, we will have a new musing on the short-term fundamentals of copper called Copper is Still on the Teeter and Totter.
Still waiting that $3 kiss from Dr. Copper, aren't we?
Yeah, and really it depends on the trade tariff talks.
Let's move on to energy markets. Oil went up about 4.4%.
Year-to-date high came off just a tad during the day today, closed at 58.49. Really nice move up. U.S. production was at 12 million barrels, off 100,000, but that is an EIA estimate. Rigs down 1. The draw was encouraging. Stocks went down 3.8 million barrels in the U.S. So I'm taking bets right now, Trevor, on Venezuelan over or under when Maduro will flee to exile and to Cuba. But that said, Venezuelan oil production is just crashing. OPEC's behaving, and in conjunction with those positive factors, strong demand, up a couple of million barrels this year, and especially coming from China, which is, as we all know now, the world's largest oil importer. U.S. imports itself are down nearly 1 million barrels over the last year, now at about 7 million barrels. And finally, here's a little tidbit. We always like to throw these in. Exxon is aiming, get this, Trevor, for $15 costs in the Permian Shale Basin. That would only be rivaled by the Saudis in terms of when you generate net back. They're a couple of years from that, but just amazing to me. Meanwhile, uranium was off a bit. It's really on pause pending the Section 232 decision expected within the month. Closed at 27.50, off 60 cents.
All right, Mickey, let's move on to money. The dollar seemed to take a hit this week, huh?
Well, dollar is basically range bound from about 96 to 97 and a half, and it came off from those recent highs of 97 and a half, closed at 96.57, down about 0.8% on the week. Euro was up concomitantly, as it always is, at 113.1. The euro for a change was not especially weak, despite the Brexit debacle. That's been postponed now, and the pound made a little bit of rally on that. Finally, the loonie eked out a gain, probably because of oil, but not that much. It was up 30 points to 74.9 on the week.
And looking back at the markets, the major U.S. markets actually had quite the rebound after last week.
They certainly did. It was an up week all week for the U.S. markets, even on a quadruple witching day today. And people thought that would introduce volatility in the market, but the VIX was down to 13 by the end of the week. Quadruple witching day means that stocks and indices, futures and options all expire today on the 15th of the month. The Dow closed at 25,849, up well over 1.5%. S&P 500, 2822, almost a 3% gain. NASDAQ closed at 7689. Just less than 4% gain. So U.S. markets did quite well. We're looking forward next week. Some things that can affect the price of gold, the dollar index, and U.S. markets is the Fed meeting in midweek. No one expects anything to come out of that except more dovish statements. We will wait and see. But if anything other than dovish statements and a pause comes out of that, it's going to affect the markets.
And we'll keep you updated on those markets next week as well. How about our friends up in Canada, in Toronto? How'd those markets play out?
Well, Trevor, here's the scoop. I think we've all cursed the PDA curse long enough that it's not going to be a curse this year. The Toronto market was up 1.5%. Venture Exchange closed at 627 on moderate, stable, and consistent volumes all week. The venture itself traded between 70 and 79 million shares all week. So some stability coming into that market. We certainly need a higher gold price before these stocks are going to start to move.
Well, thanks, Mickey. I appreciate the recap. And if I don't get a chance to say, have a happy St. Paddy's weekend, and hopefully all those explorers out there find that pot of gold and have the luck of the Irish, eh?
Hey, I hope so. We are all looking for that pot at the end of the rainbow, Trevor.
That's it for today's recap on the Metals, Money, and Markets Weekly. You can catch up on resource sector news every morning on Mining Stock Daily. Watch, listen, and read Mickey's work at mercenarygeologist.com. And tune into this show over the weekend at kitco.com.